All right, lots to chew on this morning. Now, when it comes to the big stories we are tracking in the markets, you've got the worries tied to war and what's going to happen with the economy. Now, let's start with the geopolitical story, because we already brought you those comments from Donald Trump, who's going to hold off on a decision as to whether the U.S. strikes Iran or not for as much as 2 weeks. So no imminent strike, which has taken down some of the worries in the markets. And then on top of that, we saw the Fed this week hold pat on interest rates, but we've now got a Fed governor, Chris Waller, who's saying rates could drop as soon as July. The market is obviously going to key in on that as well. Let's bring in Bob Shea. He's Chief Investment Officer at Dynasty, to get his perspective on the markets. Bob, thanks for being with us, and welcome to summer, by the way. Doesn't seem like it's going to be a slow one. What of all the big factors out there, geopolitical, trade tensions, where the economy ultimately lands, what matters most to you?
Yeah, John, good to be here with you as well. Listen, I think obviously the Israel-Iran conflict and whether the U.S. jumps in and provides more direct assistance is definitely what's on top of mind with the markets. That 2-week pause gave a little relief to the equities where they've bounced some overnight. Just getting a 2-week reprieve or so they think, unless it's just tactics. But that seems to be the pattern where, Trump has kind of backed off of whether it's tariffs or whether it's direct conflict. But I think it's important because if you think about, how he campaigned and how he came in, he really did talk about ending the war in Russia. And now we're talking about, another war on top of that.
Yeah.
And obviously there's economic, implications to this.
And so I guess against that backdrop, how are you thinking about investing? We like to cover individual stocks and sectors just to give our audience a gauge of how professionals are positioning. One of the things about the S&P 500 that we don't necessarily talk about each and every moment is that, beyond the Magnificent Seven, there are some sectors that are worth talking about just purely based on performance. As an example, industrial stocks are the best performing subgroup this year. And it's a group that you've been watching very closely. Can you explain what it is about industrials that you have liked, even though there's all this uncertainty?
Yeah, thank you. And that's great. You touched on it as well. This has been a pretty wild roller coaster year. I came into 2025, or we came into 2025. I thought 25 was going to be the year for income. I thought after 23 and 24 returns in the S&P of 25-ish%, that the starting point was not terrific for equities. That being said, we definitely wanted to stay with what we call mega trends or mega themes, one of which is this whole energy transformation. And I would, it's bigger than just energy. It's industrial renaissance. It is, powering the AI, and that can be expressed in, some industrial names, but there's also some utilities that go in that. We typically build portfolios using cheap index where it makes sense, a factor tilt for where we are in a credit or market cycle, but we also try to get at alpha. And when you can find a winning strategy that is playing on a mega theme, and you're not tied to the concentration risk of the indexes, with the Mag 7 making up such a large piece, that's a win-win. And we're getting that, tapping into this theme. We're actually using an active manager rather than just the industrial ETF.
Okay, but like, just for anyone who's hearing what you're saying, and just to give people the numbers too, like the S&P this year, it's up about 2%, I want to say, but industrials are up like 4 times that amount. And you mentioned utilities, with some of those companies that are keyed in on that theme, they're up more than 3 times the market itself. So after the S&P 500, industrials and utilities as a group have had the gains they've had, because of this mega trend, you would not be surprised to see more interest in those sectors going forward.
Correct. I've been around long enough. My desk at Goldman Sachs was Cape Canaveral for .com, and we're obviously in a transformational technology. Implementation with AI, and we saw a little pause after, into first quarter, where the semiconductors, which were really the picks and shovels and driving the first phase of it, it started to broaden out. One thing we want to keep access to this, and you can get it in the industrials. You can also get it in some tech names, but with the industrials playing these names that are powering the data centers. And what we learned after Q1 earnings was that folks are still spending on CapEx. So that has been a revival for the whole AI theme played out in industrials, utilities, as well as technology names.